Welcome back to the Money Talks podcast, the podcast where we talk about money, fitness, and lifestyle. Today we're talking about credit. Let's get into it. All right, so first things first, I lost my voice last weekend on a trip. Don't get mad at me. I think I just sound a lot cooler now. But I'm going to have to enunciate, so just bear with me, all right? So listen, we're talking about credit and credit scores today. And this is a big one. I think I run into a lot of people who hold credit and credit cards, credit scores in this high regard, like it really means something that it doesn't. So today we're going to first start with like what credit is and how it works, and then hopefully dispel some of these myths surrounding credit. Because everyone thinks, honestly, I'm going to just tell you right now, everyone thinks that it's more important than it is. Without further ado, let's get into it. So, what is a credit score? I think the best way to tell you what a credit score is to first tell you what a credit score isn't. A credit score is not a measure of your overall financial health. It is not a measure of how much wealth you have. It is not a measure of how good you are with money. A credit score simply measures how risky you are to lenders. It's a probability of whether or not or how likely you are to pay a lender back. That's all that it is. It's just how likely are you to give back the money that you borrow. That's all your credit score is really measuring. So it doesn't mean that you're financially well off. It doesn't mean that you're doing great with money. It just means that you're very likely to pay back whoever you borrow money from, which is a good thing. It's not a bad thing to have a good credit. Don't get it twisted. Okay. Having good credit does allow for better financial opportunities in some instances. And especially when you're talking about business, that's like a whole nother topic we can get into on how to use credit for your business to increase your leverage, to overall increase your cash flow. You can do that for sure. But let's keep it in the personal finance space right now and just talk about the average person's credit score. Okay. So a credit score is good to have. A good credit score is good to have, right? It does open up some better opportunities. You can get better rates on debt that you're lending or that you're borrowing. However, I would say for the average person, you shouldn't worry about it too much. Why? Because really, aside from buying a house, there's almost no reason for you to have a good credit score. And here's the problem that I see a lot of people running into is they think that having a good credit score is so important that they actually need to take steps that jeopardize their overall financial health in order to get a good credit score. So what that looks like is a lot of people will open up multiple credit cards, max out those credit cards, not pay them back, only pay the minimums, have open accounts because they believe that that's going to increase their credit and therefore give them a better overall financial picture. I think that is so backwards, and I kind of want to give some clarity in this episode today. So follow along with me. Hopefully, you learned something today. All right, so let's continue with what builds a good credit score. Well, the biggest thing of all the things that they take into account with how to increase your credit score, the biggest thing is your payment history. how consistent you were in paying back the payments on whatever loans you took out. So if you're making your minimum payments, you're probably going to have a pretty good score. The next thing is credit utilization. So that's basically out of all the money available for you to borrow, let's say you're able to borrow $10,000 total across all your cards that you have. How much percentage wise of that total $10,000 are you actually utilizing? That's your credit utilization. You want that to be pretty low. So that just means I'm able to borrow a ton, but I'm not really borrowing that much. I'm only borrowing what I need. The other main category is account age, how long you've had credit accounts open. So if you start opening credit cards or whatever credit accounts at 18, by the time you're 30, you've had 12 years of credit age or account age. That's a long time. Now, keep in mind, every time you open a new account, it's an average age. It's not like the age of your oldest card or whatever. Only it's an average age. So if you open a credit card yesterday and you open a credit card 10 years ago, well, the average between those two is 5 years, right? So your credit age, it's your average age. It's not how old your longest is. So there's a few different categories. There's more depending on what company you look at. If you look through like Credit Karma, look at your TransUnion or Experian. There's a couple of different metrics that they use, but those are like the big ones, right? If you pay your payments on time and you utilize a small percentage of your total credit available, and you have a significant amount of time pass in doing those two things, then you'll have a good credit score. These criteria are not super hard to hit while also not building wealth. What I mean by this, your payment history is just hitting the minimums. So if you take out credit on a credit card, if you max out a credit card, but you're hitting your minimums every month, you're gonna have pristine payment history. Does that mean that you're doing well financially? No, you're paying a ton of interest on your maxed out credit card still, but your payment history is perfect. So your credit is going to reflect that. Same thing with credit utilization. You might have $50,000 available to you and you maxed out a $5,000 credit score or a $5,000 credit card. There's only 10% of your overall credit available to you. That's pretty low, right? You keep it under that 10% and you're hitting your minimums. Well, your credit utilization and your payment history are going to be high, and therefore you're going to have a good credit score. Same thing with account age. That's just how long you've been doing those things. So you could have kept that same $5,000 balance on that credit card completely maxed out, paying tons of interest over the course of 20 years. Financially, you have no money, your net worth sucks, but you'd have a great credit score. So this is why I'm saying having a good credit score is not the end all be all of financial health. In fact, it's not even a measure of financial health at all. It's not a measure of how much wealth you have at all. So don't think that it is. Just don't think that it is what it isn't. Okay. So I told you I wanted to go over a couple of myths. So one thing that I hear a lot of times when I talk to people about paying off their debt is a lot of people think you need to carry a balance in order to build your credit. It's not true. You don't need to carry a balance month to month in order to build your credit. I have around an 800 credit score. I never carry a balance. Zero. Every single month. You can absolutely utilize credit cards, utilize whatever credit, and pay it off every month, not carry a balance, and still build your credit. It is not true that you have to carry a balance month to month in order to build your credit. It's simply not true. Paying interest is what you're actually doing if you carry a balance, and paying interest on cards does not increase your credit score at all. It does not help. It's not one of the metrics. Nobody uses how much interest you've paid back towards lenders in order to determine what your credit score is. It just doesn't happen. It just doesn't happen. Also, and this is the big one. This is the one that I had to learn. I was pretty late in life when I started utilizing credit cards, right? I didn't open my first credit card until I think I was like 21 or 22, something like that. Maybe even later, maybe like 22, 23, maybe something like that. A credit card is not free money. I know it seems stupid. It seems simple, but as soon as I was available, or as soon as I got $2,000 available to me, I think my first card was like 600 or something like that. My second credit card that I ever opened was like $2,100, right? Just over $2,000. To me, a broke kid, right, who had never had money available to them, that seemed like the bank just gave me $2,000 that I can spend. That seemed like I had $2,000. I don't know who needs to hear this, but you do not have $2,000 because you have a credit card that has $2,000 of a credit limit. It's just not the case. That money is not yours, I promise. So please don't think that that money is available to you and that it's yours, okay? It's not real. It's not real. Okay. So, with that being said, if you are being financially responsible, if you are being responsible with your money and you want to build your credit for whatever reason, let's say you have a goal of buying a house one day. Well, then you're going to need a good credit score to get a good interest rate. So, let's get you a good credit score. What do you have to do? Pretty simple. Pay every bill on time. Never miss a payment. Never miss a payment. If you have payments on whatever debt, pay it on time. Never miss. Never miss. If you have to call a company, if you miss by accident and you have to call a company and say, hey, I made this mistake. I like it wiped from my credit, right? That's a possibility as well. Do whatever you can to make that payment on time. I'm telling you, it's the biggest hit on your credit. Keep your utilization low. So, under 30% is like the absolute bare minimum. Under 10% is ideal. If you can keep it at zero, that's the best case, in my opinion. Keep your utilization at zero. Pay it off every single month. If you have a credit card, use it responsibly. Pay it off every month. I look at my credit card accounts. I look at every account every day, which you should be doing too, in my opinion. Look at every account every day. Look at every credit card and pay it off every single day. New charges post all the time, right? You have to wait for it to post, obviously, in order to pay it off. But every day I look, see if anything posted, and I pay off whatever the total balance is. Because I'm not using the credit card like I have additional money available to me that I don't have in my bank account. I'm using the credit card the same way I use my debit card. It's the same thing to me. Whatever I have in the account, that's how much I can use for the credit card. Utilization low. Be consistent. Let time do the work. So the biggest thing that's gonna give you the best credit score is just doing those couple of things consistently. So the credit age is a big one as well. There's no other way to like finesse the system. You just have to be consistent, paying things off over time, keeping your utilization low. And if you do that over a significant amount of time, your credit will consistently go up. And eventually you'll have a credit score of over 750 or so. When you get to 750 plus, you're in that like really good range or excellent range. There's really no benefit to having any higher, right? You're going to get the best interest rate over about 750. So once you're there, you can kind of be like, okay, I'm going to get the best interest rate on whatever loan I apply for anyway. So don't stress about getting like the top tier 100% best score you possibly can. It's just over 750, you're golden. You're golden. So I kind of mentioned this. When it comes to using credit cards, I use my credit card just like a debit card. So when we talk about financial systems, right, you guys know that I use what I call the MVP financial system, right? It's a cash flow system. It basically allows me multiple accounts for different things. So I have an account specifically for fun money, for instance. That's money that's non necessities, things that I don't absolutely need to buy. Well, I have a couple of credit cards that are for those purposes as well. So, for instance, my travel card, I have a Capital One travel card. Not an ad, by the way. I have a Capital One travel card. That travel card is obviously for travel. So when I'm traveling, I use that card, and whatever I spend on that card comes out of the non necessities account. So this is where it takes a little bit of self discipline in saying whatever is in the account that I pay the credit card off with, that's the maximum amount that I can spend on the credit card, right? You can't go off of how much is available to you because that's going to be way higher, right? A lot of times. So if you have, for instance, a travel card, which the travel cards are pretty ridiculous, right? The amount that you can spend on a travel card is often much higher than like a daily use credit card, something like that. These credit cards can start around 20, 30, 40, $50,000. If you don't have that much in that account, you need to not spend that. So that's where the self discipline comes in, right? If I just maxed out my credit card, my travel card every time, I'd have like 50 grand in debt, right, on that credit card. That's insane, right? If you don't have that same amount that you're spending in your account, then you've overspent. And now you're not going to be able to pay off your entire credit card balance in that month. That's an issue to me. If you're not responsible with your credit cards, and by being responsible, I mean being able to pay off in its entirety every single card that you have every single month, if you're not that responsible with them, you need to slow down, and maybe you shouldn't have a credit card yet. Maybe you're not there yet. That's something to consider, right? People like to pay the full statement balance every single month. Another thing that I see sometimes is the posting date, the date where the statement comes out, and the date that the payment is actually due can be a little bit off. So some people miss the date that the actual charges show up on the statement, which is the reason why I look at my accounts every day and I look at every card every day and I just pay off whatever is on there. Whatever has posted and it's on the statement, I pay that full balance. So there's never a balance on any card. Doesn't matter the day, there's no balance ever. So I don't wait the full 30 days, right? I don't wait until the end of the month and have like one day where I pay off all my credit cards. That also gets you into a position where you have to do some extra math to see if you're going to be able to pay everything off. It's like, no, dude, I see immediately how much I have in the account. what I've spent on the credit card, pay that off. Now your balance updates. You know how much you have in the account. Your credit card now goes back to zero and you have the full amount available again, right? And you can start determining how much you have from there. That's a way better system to me. Just be consistent with paying all that stuff off. Doing all those things will help you to build credit without paying a ton in interest. There's literally no reason for you to be paying interest on, especially on something like a credit card. Credit cards have the highest interest rates, right? Even if you get a credit card from like a credit union, which are typically lower, you're still going to be paying a ridiculous amount. Most credit cards start around 16% on the low end. I've seen credit cards as high as 30%. It's insane. The interest is insane. If you have any credit card debt, please, for the love of God, pay it off. Get it out of your financial picture. You will be doing so much better. You will get an immediate return that's way higher than you would ever get from investing in anything other than like a thriving business. So, hey, those are my thoughts on credit. Those are my thoughts on credit cards. I really see credit as it's not a goal. Like building good credit is not a goal. Or it's not the goal, I should say. It's a goal, it's not the goal. Credit is just a tool. The first thing is it really doesn't take that long to build good credit. Like I said, I didn't start building credit until I was 20, maybe 22, 23. So I've really only had credit for like 8 years, right? I'm 31, right? I've only had credit for like 8 years, and I have like an 800 credit score. Like if I needed a loan for any reason, I would get the best interest rate available to me. It really doesn't take that long, right? And if your goal is building credit, you may fall into one of those traps that we talked about. So just pay your bills consistently, right? You got to do that anyway. If you have any debt, it's like credit card debt, super high interest, get that stuff paid off. Once you build a solid foundation, meaning you have a good cash flow system, you have more money coming in than you have going out, right? You spend less than you make, you start investing the difference. That's building a good foundation for yourself. Once you have that good cash flow system going on, then you can be financially, then you have shown that you're financially responsible. Then you can take out maybe one credit card. Then you show that you're responsible with that credit card. You're paying off your bill every month. Should be every day checking that account. Then once you have those things, you have a solid foundation, you've shown that you're responsible, then you can start adding to that lineup of credit cards and you can start building that total credit amount so that your utilization is super, super low at all times, but you have a super high amount available to you, right? And once you get there, it's like, okay, you have several tens of thousands, 100,000 available to you. You're not using it. It's at zero every month, right? Your utilization super low. And then you do that over a solid amount of time, and you'll have like a perfect credit score. And any loan you apply for will be perfect. It'll be the best interest rate that you could possibly get. And then from there, hey, if you're a business owner or entrepreneur, I mean, the chances are that before you build a solid business and solid business credit, you're going to have to use personal credit. So that might be a situation where you want a really good credit score on the personal side of things, right? Other financial opportunities are definitely available to you if you have a good credit score, but you can't put it at the center of your financial attention. It's not the biggest thing. It's not the most important thing. The most important thing is that you spend less than you make and invest the difference. That's how you're going to get rich. I don't care what you're doing. I don't care about what business ventures you're taking on. I don't care about what hacks you saw on TikTok about credit and how you use it to finagle the system. Dude, it's it's all crap. It's all crap. Like 99.9% of that is all BS, dude. It's not gonna work. Okay? Spend less than you make, invest a difference. Building a credit score is really not that complex. You don't need some guru online to tell you. You don't need some course to tell you. You should pay your debt off. Whatever credit cards you have, keep them at zero. Boom. Over the course of time, you'll have a perfect credit score. Super simple. Super simple. All right, guys. Hey, our goal is financial freedom, okay? It's not just a good credit score, but it's a good financial foundation. That's what I want for you guys. That's all I got for you today. Thank you for tuning in to the Money Talks podcast. I've been your host, Jake. Uh, don't forget to like the video and subscribe. And I will see you in the next one. I'm out.